Good evening. It's Saturday, July the 10th, 7:26 p.m. and we're looking at a weekly chart of EUR-USD. Just to analyze some candles, I like to definitely look at weekly candles. Last week's candle was an up candle, pretty strong looking up candle, decent I would say. Not too strong where it's over bullish that it may retrace back some, and not too weak to show any signs of weakness. So a decent candle. A week before that it crosses above the 10-week moving average and came back down, kind of trying to find support, but found support more so on the 125 area and lifted back up during this last week that just was passed. So this looks to me as going up, even though we see a lot of resistance and support here. I think it's just been oversold too fast. And if you look at this channel that I've drawn here with these gray lines, the top of the channel, bottom of the channel for weekly. So it's just for long term. And of course, just want to point out the moving averages. You got the 10, you got the 20, you got 30, and you got the 50. Let's look at a daily chart now of the EUR-USD. Friday came down, but closed above where it had opened the previous day, so it doesn't look too bearish for me. I don't see any kind of candle pattern here, and I don't see any kind of flag or pennant or any type of pattern as far as I can see. As far as I can see is this downtrend that's been coming down since April of this year and down to the low of like 118 that we saw early June. It's broken that trend and it's retraced almost 50% of that. Now it could go up to 50%, maybe even go above it a little bit and then come back down, or it could turn from here. That's all up for you to decide after looking at my analysis. I though am personally bullish on the euro thus far, and I would take long positions on it, and I do have currently long positions on it. So this coming week, just looking at this candle to see how Friday closed as opposed to Thursday, what could it do? We could have a big candle that kind of shoots just above this all the way to the 50 range, which is 130 pips, 120 pips or so from where it is now. So yeah, 120 as you saw. So it could do that. It could actually turn and go back down and hit the 61.8. And these are just daily predictions. So what can happen in a day is for you to make money a couple of times over, and that's 77 down. So if you're going in and you're going long, it's riding along the top of the Bollinger Band line, but it gives us room to buy. I mean, if this is a bullish trend, which it seems like it because it's broken almost every GAN line since its last leg down. Again, like I said, from April down to here, which was about 1700 pips. Now it's gone up, healthy pullback, gone back up, and will it have a healthy pullback now, or should it shoot up a little more? That's wait and see. So I'm bullish on it, and I will be looking for a place to buy, and I think Friday would be good to buy, but I usually don't try to go in over the weekends and hold on to a trade unless I have to. Okay, now we're looking at a 4-hour chart, which should make sense to most traders that I trade with may watch this video, and that gives us a little more directions on a short term, because so much money to be made on a daily basis. I'm not a long-term player. So looking at this, we're looking at Fibonacci and GAN lines and Bollinger Bands again. So I hope you guys can see all everything, price and GAN lines and everything. So that's the Bollinger Bands that you see. Here's the GAN lines, and these are my lines that are within the GAN lines that I calculate myself to be in between. As you can see, sometimes price doesn't always go to the GAN line before it retraces, so I try to figure out what would it be another line if it was a different one. If this is 8x1, 4x1, where would a 6x1 or 7x1 or maybe a 5x1 would go? So I try to figure out like that, and I use that. So as you can see, this is written as support right here the whole time. It's a pretty strong uptrend since about since the beginning, actually, from the daily chart, since the low of 618. It's a pretty strong uptrend, and the retracement came back, and now it's going back up. So I put the highs, I put the Fibonacci at not its real peak, but at the peak that I put it. These are old lines that I've drawn in, and I usually try to keep lines on to see how good I've drawn them in, that they have. Like, I will check this out later on, I will keep these lines up, print them out somehow to see how they did do, so I can get better at, doing technical analysis and stuff. So a lot of these are, this was here before, and I could have went in, and I probably did, right here, and went long and got some pips out of there. Here's a little worrisome candle right here. I don't know, you call it a inverted hammer, a hammer, a shooting star. It doesn't matter to me what you call it, as long as you know what it does. It's a bearish candle saying the trend may be over. It's hit the top and it's come back down. So it's like reached up to the top of the Gann line, also on top of the Bollinger Band, the upper part of the Bollinger Band, which is resistance, and come back down in that, and then it's retreated some, but not enough to say it's going back up. It didn't even recover half of this big long candle that we have here. So, and then closer to the end of Friday, it just kind of hovered right around that area. So where does it go from here? I think it could be a good short, depending on how the market opens up and acts through Sunday. You can watch it and see. Here's another thing to notice. Look at the MACD. I think that's a pretty obvious divergence, where the price for that time being is going up from here, from like right here. You can see it here. From here to here is gone up, but from here to here, MACD's really gone nowhere but sideways, possibly sideways, if not down. So, and then it's a bearish crossover. The strength on the selling on the histogram seems like a little bit. So on a 4-hour chart, shorting probably would be a good idea for me. That's what I'll probably do if I played a 4-hour chart, looking at it just like this. But of course I would have tight stop losses. I'll probably pull one right here since it's an uptrend. It's always dangerous to go against the trend. So when you do play against the trend, be very careful. The payout is not as good as it would be if you were following the trend, and the losses can be greater because it can just slip out your hand very quickly. You can turn around and go up, and then you'll just be sitting there shocked looking at it saying, well, it was an uptrend, I should have saw that it was going to go up. So very careful on how you do it. I would say practice first. Okay, this is a 1-hour chart. Now, as you can see, the RSI is currently at 43, so it's definitely not above 50, so that's not bullish. Another thing is that you see the SAR, the red lines right there. This is saying that it's in a downtrend. It's very well that it may not touch it. Basically, these are, if you don't know, that when the green line is there, it's in an uptrend until the price comes back down, touches one of those dots, then the red bar starts. I'll make it a little more clear by expanding it for you guys. See, I touched it right there, and then the red bar started. So it does that. So it's possible that it may not even go. It may go a little bit up and then come back down, but it seemed to find resistance on this 10-day moving average, and that is a bearish sign to me. Plus the way the Bollinger Bands are looking, expanding in the price, the way it's acting to me in my eyes, as far as I've trained them to be, it seems like a downtrend. So that reiterates our 4-hour chart that it could possibly go down. So if I were looking to play down, I'm looking at probably 60-70 pips or so on an hourly chart. Whereas the last support, that's where you will want to be cautious. That's at 30 pips. Next support comes in probably about 70 pips, and that's where it is. A crucial 126 level is at 40. So again, be careful, if you do go short. So 126 can be a psychological level, and it can lift up from there. And the MACD, of course, is showing you right there. If you look, very clear, it's gone into bearish territory now. It's gone under the 0 line, so it's a good sign for bears.